Okay, everyone, we're going to get right into the stock market technical analysis. I'm going to do a closing market wrap video just to cover kind of how we close the day. We're at kind of really critical levels in the market, which maybe determines the next 10 or even more percent to the upside or the downside. So definitely important to really stay on top of this. And one thing before I get into it, guys, I do have to go out of town this weekend. I won't be back till about Wednesday. I think I'm coming back, Wednesday. So I likely will not be able to get a video out until Thursday. I'll try to get one out, but if I can't, I still will be able to post to the private member group. Just probably not as frequently. I'll be kind of busy. But I will still get some posts out in the morning and then later at night when I get back to my hotel. Okay, so let's get into the charts, guys. S&P 500, we'll start out here today because it's just the broad market. And again, not a whole lot has changed in terms of from the morning video. Still there at that kind of key critical support level. So we did test the 200-day today. The buyer stepped in a little early and we're above the 200. We are above the downtrend, the major downtrend here, but we are below this trend line right there. So we are at kind of a junction, kind of a critical pivot point where we're going to decide where the next 10% goes or so. I'm thinking we're going to rally. Let me show you guys what the futures look like, the ES futures. This is one thing that I was really watching today on the SPY. This is the SPY futures. Okay, so this is that bull rally here that we've been in, or the rally. I think it's a bear market rally, guys. Don't get me wrong. The rally we've been in since the October or about December. I think it's a bear market rally, but here's what we got going on. As I zoom in, we broke down and they snapped it up. We pretty much closed. We'll call it just pretty much closing right at that level. Close enough. Yes, we are below, but not anything that really matters. And it's not a clear rejection, okay? So we can't just say that we have a breakdown and a sell signal. Now, yes, it is a breakdown, and maybe this is a back test. We'll find out next week whether this is a back test. I'm leaning towards it is a breakdown, and it's going to be recovered. And then at that point, this will be a false breakdown, and we'll see probably a pretty impulsive rally. I'm guessing right here, all right? 4,060. All right, you can see that some reactions right there. So that's my target for right now, is that level up there on the ES SPY futures. Why do I think this is a false breakdown, or why am I leaning towards a rally? Well, the divergences are there. So you'll see here bullish divergences on the hourly chart here. And it just indicates that this is likely going to be a false breakdown, okay? Breakdowns that occur with divergences have a higher probability of failing. And so as of right now, I'm taking the probability. I'm at good support. I bounced off the 200 and I've got divergence, bullish divergence. I'm taking the probability that says we're going to go up. Okay, and that's it. All right, so that would be that's my outlook on the SPY. And then if I go, and if I look back at the SPY, there's those bullish divergences still intact. So again, I think consistent with the rally in the ES would be this 404.75 area. Okay, somewhere right in there. That is resistance right there. So I think we next week gap up here and do a rally like that. Okay, and then if I look at the Qs. Qs has a little bit of a different look, but not much. You can see here, triple Qs hourly. The price action today, we pretty much gapped down and just chopped around all day, closing near the highs, but still didn't, just gapping down. Still have that bullish divergence there on the Qs. That has not been negated. And you can see we're starting to turn up. So we'll see how that works out. But divergences are there. And so, yeah, I'm looking for a rally. And then if I look at the, and then the target on this one, I think we're probably just going to have to target this level right here at about 298. But again, if we get back up there to 298, I think we'll probably pop it. Because, look, you broke down here, you tested it once, you tested it twice, then you gap down. So we've clearly had a break of that support level. The recent support was right in here on the hourly chart, about 293. We broke down, closing below. If you recover that, it should have enough energy to probably get us to, probably pop up to this 303 area would be my final target. So that's what I'm looking at on the Qs. And then if I go to the NQs, the NASDAQ futures, again, same kind of look. We broke down, bullish divergence. See the PPO starting to turn up? See it right there. It's not confirmed yet, but it's definitely starting to turn up. I mean, it's turning up. You see the crossover like that. That's going to help confirm that. And then yeah, I mean, again, we could probably mark out this recent low right in here. But I think you pop back above there, we're going to probably get a rally in the NASDAQ futures as well. And I would be targeting, for right now, there's definitely resistance right here at about 12 to 67.50. So I'd probably target that as the level of resistance. That might be it, for that rally. But, that from down there to up there, it's about a 2% rally. So, again, we'll see. All right, let's flip over to Nat Gas. We'll just kind of see what's going on here. You can see the Nat Gas futures. To me, this looks like a breakout. So if I go, this is the continuous contract, but if I kind of draw out, I can even draw it like that. Let's break it down to the hourly. It's not even the cleanest draw, but if I kind of let me kind of tighten that up and something like there. And even if I mark it like that, you basically have a breakout. You have a gap up and a breakout. So anyway, we draw it. This is a breakout on that one. And then if I go to the Henry Hub gas futures, Nat Gas futures, then it basically is we broke out recently and kind of had a back test. So from what I can tell, this was your downtrend line, broke out, back tested, little dip below, and then just a solid, move up. So even if I redraw this to the most recent reaction there, like that, we still have broken out. Okay, so breakout in Nat Gas futures for sure. And then UNG, kind of mark that out. Now this one, had a downtrend like this. If I kind of extend that out, you can see, I think we already broke out. We just kind of came in for a back test, and now we've rallied. Zooming into the more, looking at the tighter time frame, you can see here, this was a pretty tight little trading range that we were in. Broke to the downside, okay, that's bearish at first glance, but now we've recovered it. So, and a clean recovery, all right, up 5% today, and that's a false breakdown. So that really should give us enough energy, probably for some decent upside. Next target of resistance is about 887. I'd put high probability we're going to get there. We've got another, we're halfway there already. So you've got another, 4 or 5% to get up to that. And then you probably get a reaction there. I would think you would. We had a lot of reactions there, so I would think you get some sort of a pullback. But ultimately, I think we're going higher here. All right, so next level after that, $10, and then, about $11. So we'll watch those levels. But looking good so far. And again, you remember I was adding on these trades as we were doing some of this backtesting price action. It just continued to look like a good, like good risk reward. Okay, wheat. So here's what I got on wheat. Well, look at a couple things. Here's the wheat ETN. I did move my line. I did redraw it. I think, I had it drawn right here covering these data points, and that would put us on a breakout and then a failure basically. There was no divergences, no negative divergences telling me that this breakout would fail. So I'm going to redraw it again back down to where I had it right here, and that actually puts us at a breakout and then a back test. We're pretty much closing right there at that back test. Very objective long area right there to buy. That's where I did add some wheat today for a move higher. Now, why do I like this line draw better than the one that I had? And in hindsight, obviously, I didn't see it before, but I like it better now because the futures. Let's look at the wheat futures here. Wheat futures, I have not moved the line, and it's very clean. You can see resistance, 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 breakout, back test, back test. Okay, So very clean trend line there. Perfect back test. So again, that's why I like the wheat ETN where it's at and how I have that line drawn now. This is a very objective area to go long. It's also made a new low today, just a slightly lower low, or equal low, we could say. Yeah, it's kind of dipped down here. Made kind of a slightly lower low than this previous low right there, and yet it's a divergent low. You can see still clean bullish divergence on the momentum indicators. So yeah, this is the buy zone. It's, on when it doesn't really get any better than this for a buy, for a low risk buy. Nothing guarantees this is going to work, but that's, this is putting the probabilities in our favor. So there's always risk involved. We need to manage the risk, but this is the area where I want to be a buyer of wheat, looking for higher prices. And really, if you look at the futures, this is the wedge. You take the widest part of the wedge to kind of measure out. It's really about, this is about the widest part. And it's setting us up for a potentially pretty monster rally up to, maybe up to about right there, which is about, 1,040 or so, maybe slightly lower. The major target's about right there. So anyways, that's what we're looking at right now, looking for higher prices. Okay, Merck. So I did go home short Merck. I'm not in love with it. It is a little bit of a cross trend trade because of I believe we're going to have a bounce in the SPY, but maybe we don't get that bounce in the SPY. And so kind of a hedge here, we're at resistance. It's about 110. We've been trading there for a while. You can see rejected once. We're back there. And, this was support before. And so, again, this is resistance until it's taken out. And that's really all that I see. We're coming off a divergent high on the daily chart. Okay, so negative divergence recently. And it fell from the high to the low, fell about 11%, 12%. Is that enough to satisfy that? I'm not exactly sure. I think there's some more downside here. Now, do we bounce when SPY bounces? Maybe, maybe not. If I look at XLV, that's the healthcare sector, you can see we're basically, just kind of coming down. And XLV kind of has this trading range. Bottom of the range is about 125, 124.50. And it looks like we're just heading right down to that range. No bullish divergence on the daily. Let's go to the hourly. No real bullish divergence on the hourly either. So again, that's kind of where I think Merck is at. I think it's just kind of weak, and I'm looking for it to sell down. LLY, maybe there's rotation that's going to happen. Who knows? LLY, this one also on the daily. Nice big bullish rising wedge pattern here. And broke, back test, and rolling over. Okay. So resistance gets sold into. Again, this was your former support, about 332. You can see they tested it 1, 2, 3, 4 days, and then it, it's giving it up and rolling over. So next support I have is about 317. We break that, and there's a gap also about 314. So maybe we run down and fill that gap, and then probably head down to the next level of 300. So yeah, gold. Did I cover gold already? Not a whole lot of change in gold, but from the morning video, again, just really selling down to key support levels or slightly below. Again, when you have a lot of momentum to the downside, maybe, it's typical to undercut support levels and then recover them. So nothing that's really out of the normal right now. I'm seeing some signs of strength, though. I mean, even when I look at this one, here's BTG, just a little gold miner, smaller one, I think. But look at that candle that it printed today. This one was up. Now, they had earnings the other day. Today, it was just up. The buyers were in there buying. That's a bullish engulfing candle on the daily. So you look for more buying to confirm. The next candle is, can be flat, but you really don't want to see selling. You want to see kind of buying to help confirm that reversal candlestick. And if that's true, then that's likely going to be, the next move higher is up. So that's just that one, which I bought a little bit of. But then when I kind of scroll down and look at just a lot of these, like Newmont's the largest miner, it's below. So there's some support right here, about 44.70. And yes, it is below there, but not by much. And then if I look at the hourly, it has a bullish falling wedge pattern, bullish divergence, really flattening out there, which is kind of interesting. But divergences are there. The bullish falling wedge pattern's there. It's right at the apex. I suspect it gaps up, maybe even gaps up to this 44.50 or so. Who knows? Back above that support level, and off she goes. So I like that as a long gold. This is Barrick Gold. Let me make sure I got the right one. Barrick Gold on the daily chart. Again, support is about there at 1642. We're slightly below there. Not by a whole lot. And on the hourly, bullish falling wedge pattern, bullish divergence. So a lot of these things have like undercut their kind of that support level, but they've got really bullish setups just below, and they're setting up to snap back and rally. So that's what I see on a lot of these. Here's another one, AUY, Yamana, closing basically at the 200-day moving average. Also, you've got some horizontal price support right about there. Okay, you can see basically that was former resistance, some chop through there, but there's, there we are. And yeah, it's at support. And if I roll down to the hourly, bullish divergence on the hourly, okay. And, it's it's probably a wedge pattern. I can kind of eyeball it. It's likely more like a downward channel, but okay, so no wedge pattern, but bullish divergence at the 200-day. So just another bullish setup. Okay, this one, AG, this is more of a silver miner. This one kind of got smoked today on earnings, down 12%. I don't own this. When I look at it, I don't see any real reason why I want to own it yet. I mean, it just undercut the most recent lows right here on the daily chart. And it does have divergence. I mean, kind of, not really on the daily. In fact, on the RSI, you can see we made a new low, so never mind on that divergence. When I go down to the hourly, no real divergence either. It's just, this price action's too new and too fresh, so nothing to really tell me to jump into this one. I think this needs to, this is going to probably bottom for a little bit, and it might be done selling off, but I think it's got to kind of maybe pop and then make a new low and kind of knock out a bottom. Here's another one, HMY. And again, I'm just highlighting the fact that a lot of these are at support. You can see here, right in there is support, maybe slightly below, maybe just right in there somewhere. You can see that was former support through that big cluster. And then once that broke, when it broke, look at that impulsive candle right there, big breakdown. That's a big sell signal, okay? When that sell signal came, obviously it was a flush out down lower prices. Then it rallied back up to resistance. Former support would now be resistance, rejected, resistance. And then when it broke back above, big impulsive green candle breaking above. So it shows that this is a clear reaction point. We're now right at that horizontal price support on this one. And it's about 296 or so. When I look at the hourly, no real bullish divergence there on the hourly. That kind of got taken out. So, mixed on that one, but at support. Okay, interest rates, TNX. Nothing really happened today, with interest rates. I mean, kind of flat. I mean, you can see we're kind of just consolidating up here around this about 4%, 3.95. So no real indication there of, no real clues, at least on the daily. If I look at the hourly, we're starting to build some negative divergence right here. You can see it, all right, on the interest rates. See how the momentum's starting to drop off and popped up, made a divergent high, failed. Popped up, made a divergent high. I'm going to bet we fail. Okay, so I think interest rates are going to come back down a little bit, and that's likely going to give the market kind of a free pass to rally a little bit. That's what I'm seeing across the charts. Okay, so that's the broad market analysis and how we closed out. I'm going to go ahead and take off, guys. Again, I'll try to I'll get out some posts to the private member group. So if you haven't joined up and you want to get those posts, link in the description below. Check out the course if you're interested. Catch you guys on the next one.